Hello, it's Angie and we're on UK Money Wisdom. Today we're looking at something different. You know, I always say knowledge is our power. In our case, power to handle tax, pensions, savings and any financial query related to our retirement. So today we're going to see if our power in this direction is increasing. But before we start, I want to be very clear about something. This is not a test. And if you get some, which we all do, or all of these wrong, it does not mean you're bad with money. No. It really points to the system that was never properly explained to us. But stick with me, because by doing so, your confidence will increase. And in many cases, so will the money in your wallet, by avoiding mistakes that can cost you thousands of pounds. The questions I'm about to ask use the same words or jargon that HMRC, the DWP and pension providers use every day. Most people, including very sensible pensioners, answer several of these incorrectly. So please don't worry about it and take it slowly. I'll give the answer straight after each question and I'll explain why the confusion happens and show you what actually matters in real life. There's no maths, no judgement at all. Most of these questions are either true or false, but some will have a yes or no answer and some will, well, you'll see how to answer as we proceed. Question number 1, just to build your confidence. Your state pension is taxable. And the answer is true. The state pension is taxable income. And if you've seen some of my videos about the frozen tax allowances, you'll know that we're worried about the state pension going above the allowance, because then we will pay tax at 20%. So, state pension is taxable income, even though no tax is taken off when it's paid. Question number 2. Again, true or false? Tax is deducted from your state pension before you receive it. And the answer is false. No tax is taken at source from your state pension when you receive it. Any tax due is collected from other income instead. You sometimes see it deducted from your own pension pot. Moving on to question number 3. ISAs count as taxable income. And the answer is false. The good thing is that ISA income is tax-free and does not affect your personal allowance. And for us pensioners, we, if we've got it, can invest up to £20,000 each year, and it will not affect our personal allowance and we won't pay tax on it. So if you've got any extra savings, do pop it into an ISA. Question number 4. If your total income is below £12,570, will you always pay no tax? And the answer is no, not always, because wrong tax codes or emergency tax can still result in deductions even below the allowance. Question number 5. This is a true or false one. You can be refunded tax that was deducted incorrectly. And the answer is true. Many pension tax issues are temporary or refundable once corrected. So please don't worry if you feel, oh, I've been taxed so much and I know that must be wrong. I'll never get it back, because you will. Okay, so please don't worry about it. And if you've got any concerns at all, just pop them in the comments. Question number 6. Now this is an everyday trap. Which income uses your personal allowance first? Is it your largest pension, the pension you started first, your state pension, or you can choose? And the answer is your state pension. HMRC has an order for all our income, and it assumes the state pension uses your allowance first, even though it's paid gross. Question 7, another everyday trap. And the question is a true or false one. Having more than one pension increases the chance of a wrong tax code. And the answer is true. Experience has shown that multiple income sources are a common cause of HMRC getting it wrong and making coding errors. So do be on the lookout for this. I've got a video of how you can check your codes, and that will be at the end of this video. Question number 8, another everyday trap. So I think these questions are very important for us to know. Now this is a true or false question too. Emergency tax can apply to pension withdrawals. And the answer is true, and especially true on first or irregular withdrawals. Emergency tax will then be common, so you must be on the lookout. Question number 9, everyday trap again. If tax is deducted incorrectly, is it always lost forever? If tax is deducted incorrectly, is it always lost forever? And the answer is no, because as explained in an earlier question, most incorrect or overpaid tax can be reclaimed or corrected. And the last question, back to the true or false. HMRC always automatically fixes pension tax issues. Is that true or false? And the answer is false. HMRC does not always automatically fix pension tax increases. The system often assumes the information it already has is correct, I'm afraid. Again, you've got to understand how the system works. It always will work in your favour, I can promise you, if you understand it. And that's it. You can always run the video again later and see how you do next time. And do let me know in the comments if this was useful, along with the other videos that I'm producing. And your feedback is what it's all about. So if there's a subject in particular that you would like me to talk about, I'll certainly do that for you. I'm Angie, and this is UK Money Wisdom. I'll see you again soon. Bye for now.